And so managerial accounting deals really with providing information that's financial and non-financial in nature to internal decision makers. And this is a little different from financial accounting, which really focuses on the financial statements which are provided to external decision makers. And so we have a different orientation because we have a different audience. Managerial accounting also deals with analysis methodologies to improve the accuracy and quality for management decisions. And so we are really providing, again, we say we have an internal focus and we're providing relevant information to managers of the organization in order to help them better interpret and project in order to better inform their decision making. And this is similar to, if we think about it, financial accounting. We want our financial statements to provide accurate and a clear picture of the results of operation to external decision makers who in their economic decisions can act in a better and more informed way. And so managerial accounting, again, we have a slightly different focus in that we're providing this information to internal managers so that they can have better information that may be more relevant, may be more timely, in order to better inform their decisions. We also see that managerial accountants are increasingly seen as a part of the value chain of the organization, and they're increasingly sought after by management as a resource for input to decisions. And that's because of the complexity of transactions and the general complexity of business, the business environment, and the need to have better resources that provide more insight. And management accounting and management accountants and the role of the management accountant, whether that's the controller or the departmental accounting managers, are really seen as integral to problem solving and decision making from an internal perspective more recently. We also see that the managerial accounting is not so focused on the financial statements as we discussed before, but they're really focused more on internal reporting. And we'll talk about this internal reporting and what that means. So we talk about, there we're talking about capital budgeting, and so it's budget development. There we're talking about capital investments, so it's alternatives and what their cash flows are, and we're talking about net present value. We're talking about, to some extent, how do we record transactions, because transactions do have to be recorded in conformity with GAAP so that the output of that recording process are financial statements. But a lot more goes on with the financial statements and the external reporting than just the recording of the transactions. And then we also talk that managerial accountants are responsible for a lot of interim reporting of results. We also see that the management accounts are generally more ingrained in the management of short-term objectives. And then we cannot ever lose sight of the fact that it doesn't matter whether it's managerial accounting or financial accounting or accounting, whatever we want to call it, we have to maintain high ethical and independence in our orientation so that when, as management comes to us and asks for this information, they can trust us, they can rely on us to give them accurate and unbiased information that they can then use in their decision making. And so those are just some of the differences in, or some of what makes up managerial accounting, some of the differences between managerial accounting and financial accounting, and some examples of some of the items we're going to be talking about this semester. So I'm really excited about the course. I think you'll enjoy it. We cover a lot of information. We cover a lot of data and a lot of methodologies and approaches this semester, and I'm looking forward to working with you throughout the semester. And thank you, and please move on to the session 1. Thank you.